Hey, what's going on, guys? In today's video, I'm going to be talking about my top 5 stocks to buy in the month of September. Even with the market at all-time highs, there are still plenty of stocks on sale, so I'm going to give you my top 5 that I think are good buys from not only a fundamental standpoint, but from a technical perspective. So we're going to have a few growth stocks and then some smaller cap value stocks, so make sure to stick around all the way to the end to get the most out of this video, and let me know what else you guys plan on watching in the upcoming month in the comments below. All right, so the first one here is Twitter, and this one is right on the verge of a potential breakout from a technical standpoint, which we're going to get into in a little bit, but first let me show you why I like them from the fundamental side. They just reported earnings at the end of July, and both their revenue and EPS were way above Wall Street's estimates, with earnings coming in at 20 cents per share versus the expected 7, and revenue also coming in at $1.19 billion, which represents a 74% growth year over year. And one of the main drivers behind this growth was an increase in their advertiser demand as the daily active users jumped by 11%. So those are some key numbers from the last quarter, but obviously stocks are forward looking. So what really matters for the stock's price here is the guidance for the next quarter. So on their earnings call, Twitter said they expect to see $1.2 billion to $1.3 billion in third quarter revenue, which is also way above the consensus estimate at $1.17 billion. So from a fundamental standpoint, Twitter looks great, right? That's what you want to see when they report earnings. You want to see strong numbers from the last quarter, and then on top of that, you want to see them up and increase their guidance for the next 1 or 2 quarters after that. So that's exactly what we saw here. So there's 2 checks for Twitter. But earlier in the video, I also mentioned that they're on the verge of a technical breakout. So let's get into that a little more. So the stock itself is hovering right around its 3-month trend level. And I don't use moving averages or anything to look for breakouts. But when it comes to trending levels, that's important, because once a stock goes from negative momentum and shifts to positive, that's when machines and algorithms will start to pick it up and buy more aggressively, which can obviously lead to big moves if that level continues to hold. So let me show you what I mean. All right, so here is the 1-year chart, and you'll notice that after the sell-off in April, we have gone on a tear here, but we finally corrected back towards this 3-month trend level that is represented by the blue line here. So if we remain at this level and even break above with good volume, this thing could absolutely rip higher. So there's a perfect example of where the fundamentals meet the technicals. So I think that this is a good opportunity to add Twitter to your portfolio. All right, next up on the list is another stock with very strong fundamentals that honestly doesn't really get talked about very often. So we're going to be talking about Starbucks, ticker symbol SBUX. And this is a fairly similar setup to what we had with Twitter, where we have strong fundamentals and technicals. So let me show you a few reasons why I like the stock right here. First off, they just reported earnings at the end of July, and some numbers to point out are net revenues up 78% to a record $7.5 billion, while earnings came in just over $1, beating the estimates by almost 30%. We also saw comparable store sales up 73% globally and up 83% here in the US, with a 10% 2-year growth rate. On top of all this, their membership program, which is for Starbucks reward members, was up 48% year over year to 24.2 million. So as a result of that very strong quarter, they were also able to raise guidance for the full year 2021 margin and earnings per share guidance, which is exactly what you want to see. So it's clear that the fundamental story is very much intact for Starbucks, but let's see how the stock has been trading with all this. Here on the 1-year chart, you can see how Starbucks has been absolutely bulletproof the entire year, just consistently making higher highs and higher lows before this massive run into earnings. Since then, we have corrected back towards this trend support level, so I think this is a great spot to buy the dip. And if you're wondering why the stock corrected after a strong earnings report, just know that that's pretty common with stocks that have huge runs into earnings, because the market tends to price in these reports before they actually come out. So now we're just back in consolidation mode, and I think we have a pretty good entry point. The fundamentals and the technicals are still both very strong, and this is always going to be a great stock to have for the long term. So check it out if it's something that you think you would be interested in. The next stock we're going to be talking about today is American Express, which has also been a beauty this year that's outperformed the rest of the market market big time along with a lot of these other names in the financial space. Financials have been a great spot to be during this entire reopening process, which has led to some of these names like American Express being up over 60% in the past year. But the best part about this, as many of you guys know, is that the entire reopening process and reopening trade in the US has pretty much been delayed with all of the Delta variant concerns. So now we have another catalyst in addition to the company's strong fundamentals, which is just the second half of the reopening process being fully turned on. And if we look at some of their numbers from last quarter, they still saw card member spending accelerate from the previous quarter and even exceed pre-pandemic levels in June, with the largest portion of this spending growth coming from millennials, Gen Z, and small business customers. So as a result of this major uptick in consumer spending, they reported earnings of $2.80 per share, which was way above the consensus estimate at 1.64, and revenues came in higher than expected at $10.24 billion. So another great example where regardless of what's happening in the US with all the variant concerns, this company saw a major increase in earnings and revenue that is only expected to continue and move higher in the fourth quarter of this year and into next year. The stock also corrected just like Starbucks did after the report and is sitting right around its trend level. So I'll be looking to add to my long position here in anticipation of another leg up in the next couple months. So there's three very high quality stocks that most of you guys have probably heard about in the past, but the last two here, I want to switch it up a bit and talk about something different. These last two stocks both recently came into the market through SPACs this year, and these are probably two of my favorite holdings for the long term. I've been saying this for a while, but I still think that there is so much opportunity in some of these SPAC names right now, just because of how they've been traded and how they've been dumped by hedge funds over the past few months, no matter how good the company might be. And don't get me wrong, there are a lot of SPACs out there that are horrible and absolutely should be dumped. But you can make some serious money if you find the diamonds in the rough here and find some names that have been flushed out with all the other awful stocks in this space. So that's where we're going to be looking. That's what these two stocks are going to be. So let's get into it. The first one is Pure Cycle Technologies, ticker symbol PCT. So Pure Cycle started to trade on the NASDAQ just a few months ago, and most people still don't even know about this name because it's not covered by the majority of media outlets. So this is the kind of stock that you want to find before it becomes common knowledge, before everyone starts talking about it. All right, so a little bit on what they do and why I see massive upside here in the future. So they're a recycling company that has the only patented technology to recycle one of the most popular plastics out there, polypropylene. This is the plastic in products that we use literally every single day, and it's used by major companies like Procter & Gamble. So you'll find this everywhere in bags, toys, bottles, you name it. Every year, it's reported that 170 billion pounds of this is left as waste because nobody has had the technology to recycle it. So Pure Cycle is now the first name in the space that's going to be able to provide these huge companies like Procter & Gamble with recycled product to use for everything that they manufacture. So if you want to think about what's going to help change the world in the future and keep the planet more sustainable, then this is it. The amount of money that's being pumped into ESG funds right now is absolutely crazy. And states need companies like this in the spotlight, but since it's still new, it really hasn't been picked up by any of these major funds yet. They're in the process of building plants across the US as we speak, and they also just announced 2 weeks ago that they partnered up with SK Global Chemical to open up an ultra-pure recycling plant in South Korea. They also just announced a partnership in the US that is going to allow them to recycle 1 billion pounds of plastic by 2025. So right now, with the stock just under $13 a share, I think that this is one of the best long-term investments that you can make. This is going to be a global company that has the technology to go on to be very big in the future. Recycling this type of plastic is a huge issue that the entire world faces, and this is the only company that is providing a solution. This is one of the biggest positions in my long-term account, so if you think these ESG stocks are going to be huge in the future, definitely check this one out. So the last one that we have on the list is another investment kind of like Pure Cycle, where I'm looking for innovation for the future, but this one specializes in digital LIDAR solutions. I mentioned this one a while back on the channel, but just like PureCycle, it also got caught up in the recent SPAC implosion, which brought it down to levels where I think that this is a massive opportunity if you're looking for longer term investments. So LIDAR stands for light detection and ranging. So what this company does is develop LIDAR sensors to use in industries like smart infrastructure, industrial, automotive, trucking, and robotics. Essentially, their goal is to be the eyes of the future that is going to help these machines see the world as we see it. So if we quickly jump into the fundamentals, we can see in their earnings report from 2 weeks ago that they had $7.4 million in revenue, which was up 72% year over year. They also had a record number of shipments with over 1,460 sensors delivered. During their presentation, they also announced that their total addressable markets are expected to grow from where we are today at $1.8 billion to over $8.6 billion by 2025. The stock was also just recently introduced to the Russell 2000 index, which means that it's now part of the benchmark, so more people are going to start to cover it from here on out. The company has a very specific asset allocation plan. They have all the tools, they have the cost-effective solutions, and they have a huge market to fuel with robots, cars, cameras, whatever it might be. And you guys probably saw this last week, but Tesla even announced that they're going to be working on creating a legitimate robot. So we can all see where the world is headed. We know that robots, self-driving cars, machines, they're all going to be a big part of the future, and they're all going to need this type of technology. So I think that right now is a great time to invest in this company before it's picked up by all the big players on Wall Street. So those are my top 5 picks for the month of September. Let me know what else you guys are watching in the comments below. And if you did find any value in that video, please do leave a like and subscribe to the channel, and I'll see you guys in the next one. Peace.